Hey everyone, welcome back to CryptoCache. Thank you very much for joining me here. I hope you're having a fantastic day. We're taking a look here at Terra Classic, seeing what's going on, of course, helping understand, best practice, big picture, the whole 9 yards, of course, and obviously trying to see kind of where it stacks up and what might happen next. Now, if you're new to the channel, just know I'm not a financial advisor. Love teaching people to trade. Hope you can learn something here today. Obviously, if you are, considering becoming a better trader, CryptoCache.tech is a site. I have a trading academy where I teach you everything that I know, as well as a community. We all learn and grow together, over 200 active members, and most important, kind of help you structure your trades effectively with trading signals that I send out that you can essentially follow or just understand what direction I'm looking. Right. So anyways, that's something just to kind of consider. CryptoCache.tech is a site, link in the description below. So here's kind of where we're at. First of all, with Terra Classic, it's kind of one of those hate to say I told you so's, but it's just kind of the way it goes. This is probably the most amplified or strongest indicator you could find in the market. In other words, when you have 3 white soldiers, essentially 3 very, very strong days of trading, it's typically always followed by a 4th red day. Okay, so again, 1, 2, 3. All right, we got that there. So I highlighted that yesterday when I closed the video out, just saying, hey, prepare for some type of redness tomorrow. Now, it may not necessarily even close super red. It may not be like, a fully engulfing candle, but it very well has potential to do that based on the fact that it's extremely overextended. So again, 1, 2, 3 strong green days, followed by a 4th red day. It's a very common characteristic in trading. So just kind of throwing that out there. I don't care if you are just tremendously, inspired by Terra Classic and this is the coin that you're going to retire with. Regardless of that fact, this is a reality and this is what happens when the price action gets overextended and you go parabolic in a short amount of time. Okay, so again, that's just kind of expected here, so all well and good. Price action, I was expecting to bounce off 24,000. It kind of did that, but it also it wicked down a lot further. So hopefully you didn't have a tight stop loss in place, but generally speaking, you want to be cautious and careful adding to your position right now, because if you look at its history, again, history is just an indication of what could happen again in the future. It doesn't always happen, but in most cases it has a tendency of repeating itself. So if we see this little area here, and we kind of duplicate that, right? We come up here, it looks very similar here, right? At least the beginning stages, okay? Hypothetically means the price action will average itself out somewhere in this area, okay? Somewhere between 21 and 24,000. Again, this is all hypothetical, of course, because I'm simply drawing lines on a chart and using previous data to, try to anticipate future data. But it has a tendency of being fairly consistent in a lot of ways, right? So again, it's not going to necessarily do the exact same thing over again, but it very well likely should. Okay, we shouldn't expect the price action to go much higher. So again, depending on your trading style and what you're planning to do with it, that should dictate if you want to take profits or not. I recommend taking profits somewhere in the 21 to 24 range, and it wicked all the way up to almost 30 or even higher. So again, there's no doubt that there are times when I can take profits and it's a little too early. But if you never take profits and you hold on for too long, you could be one of those folks that essentially just continues to hold on until it's worth nothing. All right. Not saying this is going to do that, but that's just something to kind of consider. All right, so let's look at some of the standard stuff here and kind of work our way down. Let's go ahead and actually, why don't we go ahead and replace this here, kind of see where we're at. We're going to base it on yesterday's candlestick close and kind of see here. And interestingly enough, all the previous supports are lining up perfectly with Fibonacci. So that just kind of reaffirms the fact that that is a strong likelihood of the price action consolidating in those areas. So with we see here 25,300, that is essentially a new support level, or essentially right where the support level should be, along with 21.7. When we look at the RSI though, what we can see here is the RSI is coming back down. This is very standard for it to come down and retest and potentially bounce. And I say potential because it commonly works as a support level once you've broken past 70 on the RSI. That could imply if the price action continues lower, that 21,700 should likely be a bouncing point. Okay, so that's, again, just something to kind of consider there. MACD is not really telling us too much. It's extremely overextended, and we can see that correct itself perhaps in time, but on the daily we won't see that happen for a while. Moving averages are working their way up. The 20-day set moving average works concurrently in most cases with ascending trends, so we can kind of, we could even go as far as pushing this all the way out here and seeing roughly if that's going to decide to continue or not, right? So again, we'll see eventually if that ascending trend continues, because eventually it's gonna test this level one way or the other, right? So it would be nice if it held, because a lot of times the 50-day set moving average will average itself out with it, and the 20 is like the initial indicator. Those are just kind of things, again, you kind of see and anticipate ahead of time. Right now, they don't really matter too much because it's going to be a while before we see that tested. When it comes to the 4 hour though, we can see we're above all moving averages. The 20 is soon to get tested here. Now, if that were to be tested, just say for example, it's not a problem, The 20 is not the strongest moving average on the 4-hour time frame. The 50 and the 200 are more appropriate. And as you can see here, the 50 and the 200 here is working itself concurrent with that ascending trend. Very similar to the 50 on the daily. Okay, so again, those moving averages carry more weight than the faster moving averages on the smaller time frames, because you got to understand, the prices are responding quicker to that, and in turn, it may not work as a support level. It's not established over time. All right. So that being said, we take a look at the RSI here. We lost 70, which makes perfect sense. I'm actually glad to see that, because now it's no longer in the overextended category here. It's like it got way too out of whack, and that's just that's standard deviation. If you can see it clear as day on the Bollinger Bands. Just this line here where the price action got way too far out of whack. It tried way too hard and has to come back down. Just like natural, there's like a natural gravity for trading. What goes up must come down. That's what I'm trying to explain this whole time. A lot of folks are not too happy with the fact that I expected today to be a red day. That's okay. It's just kind of the way that it goes sometimes, right? And again, I could have been wrong, totally. And the day isn't even over yet, right? So it's not even like it's finished. But it does look like it wants to kind of start to consolidate and go sideways for a little while. And that would be actually a very positive thing. You got to recognize parabolic increases are going to result in a parabolic decrease if they are not consolidated correctly at specific time frames. That's why the fourth red day makes perfect sense. That's why it almost always happens. We could leg up again, totally, but the likelihood of that is fairly low without consolidation. All right. That being said, here we can see the RSI once again below 70 over 50. That's a positive thing. We see a MACD divergence here, of course, and this is kind of one of those things that you want to pay attention to. The 4-hour MACD divergence, to me, is a very big indication of momentum shift. In other words, the bulls have effectively lost controls, and now the bears are taking control, right? So again, it's no guarantee it's going to just drop like a rock, but it absolutely ensures that we should not expect the price action to go much higher, at least in the immediate future, all right? Just get that into your head, and it's all well and good if it does, but it's actually not in a sense, because if you see a candle wick like this, for example, the price just shoots up, it's going to get rejected and come back down even harder, right? Because again, there's the buying pressure is starting to just dissipate, and the selling pressure increases, specifically because of the fact that it's overextended and the whales know when to take their profits, right? They're just sitting on the sidelines right now watching the rest of us scramble. That's just kind of how it works. So the key is to kind of get in their head and understand what they're doing and to try to work around that. So right here, so far we can see on the hourly, we got a slight rejection here at the key level resistance at about 25,300. Actually, you could round up to say 25,400 rather. So 25.4 is a key level resistance. Potential. Again, no guarantees on that, but as we can see here, we are no longer making higher highs, right? And we are now effectively making lower lows and lower highs. That is a shift in momentum. 4-hour tells us that. A lot of other time frames tell us that too. The three white soldiers told us that yesterday, right? Just kind of a matter of time. That being said, we're on the hourly. If we take a look at the Ichimoku Cloud, we are still holding above the cloud. This is a positive sign. However, conversion line is below the baseline, so we've lost that significant momentum. The lagging span is underneath the price action now, so basically 2 out of 3 indications here of a short signal. Not saying you want a short, because I think there's no guarantees here, right? This very well could continue to increase. But on the same accord, it's losing and lost a lot of momentum, and the likelihood of it continuing lower is higher based on that sentiment. Now, we're not below the cloud yet, so until we break below the cloud soundly, I would not recommend taking either a long or short position. And try not to get in your head like, oh, okay, great, we're above the cloud still. Green light, I'm going to take a long. No, not exactly the case. That's not what you want to do. You want to wait for confirmation on the cloud and have all 3 indications. There is only 2 indications showing us we want to go to the downside and 1 indication going up. That's conflicting, doesn't work, don't do it. That's essentially what I do. I like to look for confirmation. I trade a little bit more effectively. I try not to trade with passion and feeling. I like to trade on lack of emotion and strictly technical data, right? And the technical data is not telling us to take a long or a short. We're kind of in that transitionary time frame. We don't have confirmation yet. Take a look at TD sequential. This is an example of how an overextended state can occur. Again, cryptocurrency has a tendency of doing this. And if you see this here, you see a 9 followed by a bunch of other candlesticks. We've got a reset up to another 9. 2 9s in a row is a recipe for disaster. We could even say that's 3 9s in a row because there was a 9 previously as well the day before. But again, 3 white soldiers, 3, the things come in threes oftentimes in trading. If you see 3 9s on TD sequential, that's essentially telling us you have 36 hours straight of continuation, or 27 to 36 hours of just nonstop increase, right? what goes up must come down. You have to understand that, and that's essentially what's happening now. So the likelihood, I feel, of the price action coming down lower is higher, but it doesn't necessarily have to drop like a rock. I mean, I would say worst case scenario is probably like 19.2, and better case scenario would be the price action consolidating sideways in the range of 22 upwards of 25.3 or 25.4 rather. So 22,000 up 20 to 25,400. That is the range I expect the price action to average itself out. Again, if it continues higher from here, just keep in mind it's going to drop a lot harder if it does. So please recognize that. It's actually very healthy and very good for this to consolidate down and to continue to slowly bleed out. It's actually very important. It has to happen because profits must be taken at one point or another, right? No one's just going to continue to add to their bag and never sell. And I'm not talking about you either. If you're a HODL portfolio, perfectly fine. Go ahead and do that. I would not recommend it on a coin like this, of course. With it going to 1 cent is extremely unlikely, all right? Just being the voice of reason for you. If that were to happen, great. More power to you, but you should not put your life savings into a coin like this. The whales are completely manipulating the price. It's not just folks like you and I. All right, so just keep that in mind. There's a lot more going on than meets the eye. Anyways, just some pointers, heads up. This is kind of just what's going on, very standard stuff. And I hope you found benefit, obviously. Sorry, I do tend to ramble, apologize for that. Hope you learned something here today. Once again, CryptoCache.tech is a site, link in the description below. Go ahead and join over 200 active members in my community and be happy to work with you there. Obviously, I do offer a trading academy community and signal group that's kind of all-inclusive. It's kind of your one-stop shop for trading cryptocurrency, but more importantly, too, I do offer discounts for military and third world countries. So thank you so much for your service, as well as, obviously trying to make something of your life, right? Absolutely can do that with trading. I just recommend being cautious and careful on coins like this because it's an extremely volatile market, and coins like this can get you wrecked, and they can also get you rich too. You just got to play your cards right. All right, thanks again for your time. We'll look forward to seeing the next one. Take care.